Reasons why retail traders lose. Part 2. Patience. So in this video I'm just going to run through some of the parts of patience which people seem to have very little of, and see how it may help you identify those same problems, and if you're aware of them a little bit clearer and you have in them, maybe it will help you make changes. If you make the slices of changes, often it can have quite a big result on the bottom line. So let's look at them. Firstly, expectation of results. We have lots and lots of people out there which run courses, quite often £30,000, £20,000, £10,000 courses, all these expensive courses. They're not going to sell these courses without you believing that this time next year you're going to be absolutely hammering it. So the expectation of results are built often by the advertising, the Instagrams, the Facebooks, etc. I would suggest you step back on that one a little bit. A lot of the expectations are too much. Look at where look at what's really coming from the bigger professional traders. Look at their expectations. 20% a year, they'd be happy with that. Okay, some hedge funds whack out 100% a year or something like that, but they might do it for a year or two and then completely pop the other way. It's about being in the game for the long term, so your expectations should be built on that basis. Taking a trade too early, not waiting for the setup to actually happen, because of the fear of missing out. There's two parts of this effectively. There's the actual pressing the button too early in terms of getting into the trade that way. As I said, you just don't want to miss out, and you think this is when I've got to take it, and you know what happens next is, of course, it goes up another few pips, points, pounds, well, if it goes that way, and then rolls back over, and it's all over. So you've got to be patient. Patience with the time that you're taking to trade. Just let it happen. Set buy stops, sell stops. You don't have to sit there necessarily to take a trade. You see someone, actually sometimes I'll call one of the trades I'm taking. It's so easy just to think, well, okay, he's looking to trade that. I'll set the order there as a buy stop or sell stop, and they can get on and trade it like so. You don't have to sit and watch the screen, and that's part of patience. Sitting there watching, it's like watching a kettle boil, isn't it? The other aspect of this taking trades too early is it's the time of days that you're trading as well. People are trading. See a lot of volume coming into the market 7 o'clock onwards, and there was a great deal of belief of a lot of traders that they had to be there at 6:30 or 5:30 to get the early pickings. A lot of those traders eventually realized that they were being taken to the cleaners. The volumes were lower, the volatility was somewhat patchy, and the chop was often massive. So most of my trades, near enough all my trades, are taken after 8 o'clock in the morning. I have a particular window I would trade in. Sometimes on the back end of it, later in the day, I might have an exception to getting into a swing trade, but if I'm looking at a day trade, it's post 8 o'clock, often 9 o'clock or even later. It depends on when the market gives it to you, not when you want it. Trading too frequently. There's a complete belief system that people have that they should be, if they're day trading probably 10 or 20 trades a day. The result is often they're just paying their broker a lot of money. So it's not necessarily making the money. If you're trading frequently and you're making a lot of money, carry on. Good on you, and continue. If you're trading or very frequently and you're not making any money, and in fact you're losing money, well, then it's time to take stock and change things. Finally, here I'm going to be talking about taking profits too early. It's a killer. If you're willing to risk 1% of your account on a trade, and yet at it's only up 0.5% and you close it because you're panicking, or you just haven't got the patience for it to get there, then you're always going to be behind the curve a little bit. So you've got to be patient. You just put the orders in, and wherever possible, put the buy stops, the sell stops in there, of course, in the first place, but also put the profit targets in there. And if you're going to track stops, fine, but don't do it too early. It's just as bad, if not worse, than taking profits too early is tracking a stop up too early, only for the market that's natural volatility to come back and stop you out. If you're on a market that's sort of moving at 20 or 30 points an hour, you've got to at least leave a couple of hours at least in there. If you're pushing it up too close, it may be a technique used for the finishing part of the trade, or as you're getting closer and closer, you may just tighten it down. There are slight exceptions to things like closing profits off maybe on a Friday. You may just say, or before some news, you may take the profits then, but it's for a good reason, not because you're just up a little bit and you think, I'm going to pocket that. But it's something people do. They'll hold on to their losers for a long time, have a lot of patience for losers. As soon as the trade becomes profitable again, they then lose patience with it. They've had it running for X amount of hours. It's profitable for about 15 minutes and they're closing it. And the story from then onwards is obvious. So what can you do then about patience? A key thing is don't sit in front of your screens all day unless you're doing back testing, doing something else that's valuable. Sitting there waiting for a trade, there's alarms, there's all sorts of clever technology out there these days. We're fortunate, we've got all types of orders in there, the kill or fill and everything else available to us. So there's so many different techniques about taking the trades themselves. I should start with expectations. Just get them in order. Look at what you would really be happy with and compare that to what's really possible, and then set your expectations there. And you're starting from a more comfortable place. You're not setting yourself up to foul. You're setting yourself up to win. Leaving the trades, don't trade them too early. Don't look at the windows of your trading time frames. Look at how many trades you take before a certain period, or in what period you're taking your trades. Look, if you've got a higher lose rate in a certain time frame, then just don't trade the time frame, or look at why they're losing in that time frame. If you're doing hundreds of trades and you're profitable, fine, carry on. If you're taking too many trades and you're not making money, look at how you can reduce the number of trades. All you're doing is you're paying the broker more and more in terms of costs, one way, whether it be the spread, or if you're paying a fee as well, that you're giving the broker the money. And to take profits too soon, the easiest way is don't look at the screen. Don't be logging in. All this lovely technology is a double-edged sword. Yes, we can sort of dial in from anywhere in the world, or look in from anywhere in the world. Show my age there with a dial in, but you can look at anywhere in the world where your account is, where it's sitting. Often looking at the accounts don't do any good to you at all, because you can see monetary values. The best thing is look at a chart if you really need to have a look. Don't look at the account, look at the charts and see what they're doing, and then walk away if it hasn't done it. Just use the orders and that's it. Okay, quick 8 minutes. Hopefully you find this useful. It just sort of brings things to the mind, and it may get you looking at some things you hadn't thought of. Best, and trade carefully.